This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 19th, 2016. Euro dollar. So the euro has seen a bit of a rally in recent trade, although the recent breakdown that we saw below 113.27, that base from the other week, does suggest that the market should be poised for a resumption of declines. At this point, look for this rally to stall out somewhere ahead of 114, with only a breakback above 114.65 to compromise the newly adopted bearish outlook following that top that we saw the other week at 14.65, a fresh 2016 high. Again, if we do break back above 114.65, it would open the door for a more meaningful upside extension towards critical medium-term resistance at 117.10 further up. But while we hold below, there is risk for a lower top and bearish resumption back below recent support that we saw at 12.34 and towards 11.45 further down. Sterling dollar. So cable has done a good job of being supported ahead of 140 in recent trade, with the market putting in a nice little correction over the past several sessions. But overall, the downtrend remains firmly intact, and the market is expected to stall out yet again ahead of a next reversal lower back below 140.05 recent support and towards a retest of the 7-year low at 138.36 further down. Only back above 145.15 at this point would delay that bearish outlook. Dollar yen. So dollar yen has done a good job trading down to fresh multi-month lows, though we have seen a bit of a consolidation after the market traded down to as low as 107.63 the other week. At this point, though, any rally should be very well capped by previous support now turn resistance in the 110 area, while a breakback below that recent low will expose the next downside extension towards a measured move at 106.50 further down. Euro Swiss. So Euro Swiss continues to consolidate just off some key range-based support at 108.10, and the market is expected to trade ahead of that and above that level in favor of the next upside extension back above 110.24 and towards the multi-month peak at 112 further up. At this point, only a breakback below 108.10 would compromise this newly adopted recovery bullish structure for Euro Swiss. Aussie dollar. So Aussie continues with its surge to fresh 2016 highs, and the market is now focused on a test of next key medium-term resistance at 78.50 further up. At this point, it would take a breakback below 74.77 to really take the immediate pressure off the top side. Dollar CAD. So dollar CAD is now flirting with a break to fresh 2016 lows below that recent low at 27.45, and a breakdown below that level at 27.45 will expose a measured move downside extension towards 125 further down. At this point, it's going to take a break back above 32.19 to officially alleviate immediate downside pressure. Kiwi dollar. So Kiwi has done a good job rallying up to and just above the major psychological barrier at 70 to fresh 2016 highs. At this point, though, this is medium-term resistance, so it will be interesting to see how the market responds to this psychological barrier. A weekly close above 70 could open the door for a major upside move, while inability to establish above 70 could suggest the market is looking to top out ahead of a bearish resumption. But it will take a breakback below 67.59 to really confirm or strengthen this outlook and put the pressure back on the downside. SPX 500. So the S&P 500 is now closing in on some critical resistance at 2100 further up, which would coincide with some downtrend resistance off the 2015 record high. At this point, the market is still favored to put in a meaningful lower top around 2100 and below that record high from 2015 ahead of the next major downside extension, which would be strengthened on a break below 2021, exposing a move back down towards the 1808 February low. Only a weekly close or even a daily close or a weekly close back above 2100 would really give reason for concern here and suggest the market wants to make a full retracement back towards that 2015 record high. Gold. So not much going on with gold in recent trade as the market is comfortably consolidating above that previous resistance now turned support at 1190. It looks like the market should continue to be well supported now following that break that we saw several weeks back above 1190, which signaled a shift in the structure ahead of what should be the next major upside extension to challenge the 2015 peak at 1307 further up. Ultimately, only a weekly close below 1190 would compromise this newly adopted bullish outlook for gold.